get a move on and bring on board then Sunjay Kapur, Chairman Sona Comstar and Sona Group, joining in to talk a little bit about the pact that they've inked with Blackstone and Comstar, their plans for opportunities in the EV space, as well as the demand slowdown that we're seeing all around. Thank you so much, Sanjay, for joining in. So let's start off with that deal. Just walk us through the structure and the rationale as well behind that partnership with Blackstone and Comstar.
Yeah, so what we've done is we had Sona BLW, which is our forging business, which we've been able to grow from a pure play bevel gear manufacturer to a differential manufacturer now. Over a period of time, we're now supplying entire differentials. Comstar, the company that we brought into this fold, is in the electric starter motor business. Our aim is to really build eventually an electric drivetrain with the technology that Comstar has, and see how we can take the motor technology that they have that exists, and how we can sort of build more upon that and build that electric drivetrain. As you're familiar, we had GM Finance as a private equity partner in our business, and to exit GM Finance, we brought Blackstone into the operating company, which was the forging division. Blackstone had acquired Comstar earlier last year, and we bought Comstar from Blackstone and brought the two entities together.
Okay, so any more details then on the combined entity? Would your key focus continue to be EV and hybrids, or will you be, tweaking your plans now that the government says that there's no deadline for the EV shift?
Currently, we're supplying to both. From the forging division, we're supplying to the ICE as well as the electric vehicle market. Our expansion is in differentials for electric vehicles. Next year, we should have a capacity in place to produce 1.25 million differentials for the electric vehicle market, and this is predominantly export. I'd say almost 100%, if not 95, almost 100% of those differentials will be exported. That's a forging business. So we are in the Indian market. We supply to all the major OEMs in the passenger car space, as well as commercial vehicles and the farm equipment and off-highway vehicle space. So we're very well entrenched in the ICE business, as well as now expanding into electric, because you're seeing a focus or a shift towards more electric vehicles globally. So whilst India may not mandate electrification, we're still preparing ourselves to cater to that space in that market. As far as the starter motor business is concerned, it is predominantly ICE driven. We've now developed a motor for the hybrid vehicle. So our expansion is really in the hybrid space. And again, 85 to 90% of that business is exported out of India. So that's how we've structured our business.
Sure. So Sanjay, hi, morning. Highlight for us, how's the current order pipeline looking like for EVs overseas, and are you supplying only to passenger vehicles at the moment? If you could just highlight, what are your key global clients like?
So currently we're supplying to, or we're developing the products for passenger car, and we're developing the products for, again, like I said, the export market. We're supplying to all major global OEMs. I'm not at liberty to name the customers due to confidentiality reasons. However, we're supplying in the passenger car space. We've also developed the differential for the light commercial vehicles, again for EVs and light commercial vehicle space for the export market.
Right. If the shift to EV, Sanjay, were to take a natural course, as stated by the Minister, Mr. Gadkari, how long would you think would it take for consumers to accept the concept? And now that there's no strict deadline, could EV acceptance be maybe slower?
So I think what happens with EV is that we need an ecosystem, right? Electric vehicles don't work just on their own. There needs to be an ecosystem built and infrastructure built around it. So, what are the fears in electrification? There's range anxiety. There's, will there be the right amount of infrastructure, etc. And once that gets built, I think customers adapt. From what I've seen in any space, in any sort of market, in any product also, customers adapt easily to change in technology. And I don't feel that we're absolutely ready today with the right infrastructure in place. However, the infrastructure, once it's built, we will move towards EV, or let me say an increased number of electric vehicles. I don't think that the ICE and the hybrid vehicle will go out of production in its entirety. I think it will remain, and EV will continue to, maybe the numbers will increase, and again, this is very dependent on the ecosystem that's built to sort of support the electrification of vehicles.
So Sanjay, as a combined entity, what is the overall opportunity that you're eyeing? Do you have any internal targets in mind?
Yeah, so today we're on a combined basis, we're about $500 million in sales. We hope by 2024 to go to $1 billion in revenue. We will look at newer technologies. We will look at acquisitions in the Indian market space. We want to continue to manufacture in India and supply to the rest of the world. We're very bullish on the fact that manufacturing in India is where we want to be and where we see a lot of growth opportunities, and we see this as a great base to manufacture, and we will continue to look at newer technologies. Again, because the automotive industry is so disruptive globally, there's going to be a lot of opportunity to look at newer technologies going forward, and that's really where we're going to focus on.
So what is the Capex requirement then of the new entity? You just mentioned that you're looking to expand via partnerships. Are we looking at more inorganic growth plans then?
So currently we're looking at a Capex of about $30 million because, again, we are in an industry which has slowed down to some extent. So we're going to be conservative with capital expenditure. We're looking at expanding our EV footprint in terms of differentials. So we're investing in a new plant which is building differentials for the electric vehicle. We're also looking at expanding into in the BSG, which is the motor for hybrids, again from our electric division. So on a consolidated basis, about 30 million, which includes maintenance Capex for this year. Going forward, of course, when we look at a target of $1 billion, there's going to be organic and inorganic growth, and it depends on what we sort of end up looking at acquiring, and then the remainder will come from internal growth.
Right. Sanjay, we've been talking about the current slowdown which has hit the economy. How is it that you're building efficiencies, managing costs? What's been the impact on component suppliers by plant shutdowns that one has seen, the inventory pile up? And have you also had to downsize in any way?
So we have not downsized. We've not let go of any people. That really comes right at the end. I mean, as an organization, even when we went through a downturn in 2008, 2009, we never let go of people. We've been able to manage with the people that we have. We're a lean organization, so we are pretty efficient in that. Cost cutting comes at all levels, whether it be travel costs, it be administration cost, and this is really where companies start focusing on, and we've done just that in terms of cost. We've been able to manage our inventory, fortunately, pretty well, so we're not sitting on high inventory. We have schedules from our customers. We work well with our customers, and therefore we've been able to manage the business and the slowdown.
Okay, Sanjay, great to have you on the show. Thanks so much for taking out the time to speak, and congratulations once again on the deal.